So Shavi FS Hub, let's look at AUD USD on a quarter time frame. That's this 3 months chart. This is very important because it gives you overall picture of the direction of trend. And we're going to look back. This is basically an educational series. Don't take it personal. We will look back in July 2001 and we'll see the uptrend from AUD. AUD started rallying from 2001. The Australian economy continued to go stronger, continued to go stronger, forming an ascending trend line with these two price action. You see, AUD has formed an ascending trend line with these two price action, and it continued growing until it gets to a point where they can't continue and with a strong resistance for no reason. Of course, there's no strong resistance structure, so market has to create a structure at one point. And so from this level, the U.S. economy, started getting stronger again, and the structure started retracing. In 3 months, we had a strong bearish candle. Now, I want to mention the strong bearish candles from the side of EXY, from the side of dollar, what this can possibly do, and it can continue to do it. In 3 months, look at one bearish candle. There is also a very high probability that you do have a strong bearish candle in this month. Look at what price have done in 2008. 2008, we look at the economic calendar and see what transpired that resulted to U.S. economy, gaining such massive advantage over Australian dollar. And let's look at it. You see, in one single month, this is quarter 3 months. Look at what price has done. So when we look at it from this way, there's also a very high probability that the price will drop from here and then to bring price to the floor of this bearish descending channel. So at the moment now we have a bearish descending channel. This is the roof and this is the floor. This is a quarterly chart, 3 months chart. So this is the roof and this is the floor. And you can see actively how price, keep updating the roof, from 2011, 2013, that from the descending trend line. Then price came back in January 2021, respected the structure. Return 2022 respected the structure, and finally 2024 October respected the structure. And here we have here a break of structure in after price creating a resistance structure in 2008, and price managed to come back, break a structure in 2010, and came here as a retest candle. So we also bring this to this point is a retest candle. And subsequently after that, price return again in April 2012 quarterly. This is three months. Every candle here represents a 3 month chart. So this is important for AUD because of the choppy nature of AUD. So I decided to devise 3 months charts. 3 months chart will give you a more accurate price action and will allow you to take trade and go on vacation. If you want to be on vacation when your trade is running, be on a higher time frame chart, 6 months, 3 months, yearly. This is a recent discovery, and as we discovered it, we will continue to do quarterly charts for all pairs. So we're going to look back all the charts we've done and look at them at 3 months. So it gives us a clear directional bias as to where the pair is going to. So you can see the breakout from the structure and a possible retest. Here becomes a retest zone. So after price broke out from ascending trend line, it came back and retested, and it gave us a strong bearish drop, confirming that the principle of breakout retest holds over 80% of the time. So if something is over 80%, it means that it has a constant recurrence, or its recurrence probability is very high. So at that level, you see a retest to that broken ascending trend line, and price has come to retest with a strong bearish candle in April 2010 before price picking support from a descending trend line, still on another break of structure. It's still another break of structure. It broke a descending trend line and came back to retest it. And at this level, we have here as RT. So that's a retest candle. So we had a retest candle in the month of July 2010. We continued that rally, and when we came down finally, we now formed a bearish channel. The bearish channel will have two heads, two legs. Look at the two heads here. 1, 2, 1, 2. Formed us a bearish descending trend line or bearish channel. So we can call this a bearish descending channel because it's not bullish by nature. So when you look at it now, what happens is that when traders say manipulation, manipulation, actually there is no manipulation. Even if you think there is manipulation, the manipulation is structural. So it's structural in the sense that it's a pre-planned manipulation. It's already planned. So because it's planned, they already know what to do when it gets to where they feel they will be satisfied. Now we have a bearish descending channel. If you have this and you have this knowledge of trading pattern, now you should know analytically that this quarter candle, this 3 month candle will come here. Here becomes the floor. As here has been tested, this is a dynamic demand floor. It's an institutional floor. Every trade you see on this channel is an institutional trade. It's not for retail traders. The institutional traders have already taken the trade and gone back to their business and allow retail traders to continue to play. What does this mean? After break of structure, price came here on retest. Now the next thing is that they play around, come here again, they enter the buy idea, making here a demand floor. So it's an institutional demand floor because they opened the trade and the trade ran for almost how many years? Close to 3 years of buy. Now, this is the roof, a supply roof. When price got to the supply roof in 2021, what have they done? They initiated a set structure. And on this set structure is on double confluence. What made it double confluence? We have here a horizontal structure. So we have here a horizontal structure, and that horizontal structure coincides with a descending trend line. It makes it a high probability trade because of what? Double confluence. A descending trend line needs a horizontal structure. Price has already broken out from the structure, retested one, retested two, and the second retest coincides with the descending trend line that made the roof of the bearish descending channel. So what you have here now is another retest on the same channel. It's also an institutional trade. It happened from April up to the selling continued till January, till October. Up to January, we see the sell. Now price returned again in October 2024 and respected the same descending trend line that made up the bearish descending channel. So what we have here from the floor, we have here July 2001, an ascending trend line, and we have another stock in April 2022 forming an ascending trend line, which I will call ATL. So let's put that. That's our ATL. These are ATL Atlanta. So we also have a descending trend line. These are DTL. So we have a couple of DTL at the level, and let's get them fast. So I label these things to limit time. I know everybody has time for something very important, so you don't want to waste so much of your time. So this is a horizontal structure. We call it like a horizontal demand and supply trend line. And we have another of it. So these are all big DSL. So henceforth, our trading strategy is going to carry all our logos and our trading pattern. And this will give you a clear directional bias as to how you trade on a lower time frame. So if you have an alignment on a lower time frame, it's a high probability trade. So you can see what happened when price in April 2020 with the both of them forming an ascending trend line, and price returned again in October 2022 to respect the structure, making an institutional demand floor. So this is an institutional ascending trend line, and when price returned here is a buy. Australian dollar tried to buy. When price returned again in the month of October 2023, it tries to buy. It returns again in April 2024, tries to buy, comes again in July 2024, bought again. Then, ladies and gentlemen, October 2024 to December broke the structure. Now we have break of structure. What structure was broken? ATL, an ascending trend line, is an institutional buy order. It's an institutional buy order in the sense that for every time price have come here, you can see the price action that is evident. You do not need somebody to tell you. When you look at this quarter chart, you will see that this is an institutional trend line. What is the institutional trend line? For every time price comes on that trend line, whether you are a trader or not a trader, if you place a buy bet, it's going to work. So for 3 months, you are holding a buy idea. For every time price returns to this ascending trend line, if you put a buy idea, go on holiday. After 3 months of your holiday, check your account, you're in profit. That's what it means. That's what it means. So you look at it when price return here, 3 months of complete buy, 3 months of complete buy, 3 months of complete buy. Look at when you sold to this level came here, the next month is a buy. The next month is a sell because it has to sell down. The next month again is a buy. For complete 3 months, get buying. Now price return again for another 3 months again is a buy. Then after which now the structure in a complete 3 months we had a complete bearish structure break after price tapping to the supply roof. The supply roof of the bearish descending channel broke the price on a stronger US economy. And on that break, what we'll see is a retest. So what we expect in this quarter, in this first quarter, which I think it's 50-50, in the sense that if we are going to have a retest might pull itself to retest a broken demand floor and continue selling. This is what I anticipate for Australian economy. This is my perspective for Australian economy against United States dollar. Will this happen 100%? Actually, nobody can say that. Nobody can say. But what we are doing is to interpret the chart. So in the course of interpreting the chart, we have a break of structure. The structure that was broken is an institutional ascending trend line running from 2000 into 2024, over 24 years of trend line. Let's be very honest. To break a 24-year trend line, because from the year 2000 to 2024, AUD USD has maintained a trend line, and you can see it's evident. So what I see that will happen is that in this quarter, there is a probability that buying will be initiated if the Reserve Bank of Australia, under its leadership, if they change their monetary policies, which I think there is little they can do. We have a change in leadership in the United States, and the idea will put American economy first. So on that probability, I do not see AUD doing much. But if they try to do much, keep yourself on the bearish side that you're going to sell AUD as you see a considerable swing, you go short. So what we'll see is if you have a case like this, a retest to a broken ascending trend line, you short from there. You short from there. You short from there. This is very, very possible. And when we look at it, you see what price have done in 2008. In 2008, a strong bearish drop. Then we look at the economic calendar to see if we have a new presidency in this era that crashed Australian economy. We look at it and see. So if this is associated to political stability or political instability, we look at it and see the dynamic nature of this bearish 3 month candle, because it's very, very obvious that if you have a character that surrounds this very bearish character and it happens again, then we will have a similar drop in price. So what we see for AUD USD in this first quarter, January, February, March, is there is a probability that price, because now we have a breakout from an ascending trend line ATO, then what we should look for is a retest into a broken support structure that will become a supply reef, and an opportunity to short AUD USD, where we look to continue to move in a bearish direction. And you can see the bearish channel has been updated. We move 1, 2, 3, 4, 5, and the floor updated 1, 2, 3. And you see this place lately is still staying vacant. So it will be a good time to see in the future if the US economy manages to crack Australian dollar to this point. If we come to this point, that will be an opportunity to go long on water candle analysis. So we look at this, and I think henceforth we'll continue to incorporate a 3 months chart on every chart for clear directional bias. So this is what we see for this pair, and we hope that at this level that Australian economy will try to sustain. But if they fail, then that would technically mean that AUD will continue to slide down. We have a strong support at 0.61354. That area is an area of strong support. So we know that that area hits market. You can look at it, look at the price here. You can see here the man in 2008. You can see here the body of a candle in 2020, and look at the week. And subsequently, I think this week will continue to be viewed. So this is a strong demand zone for AED. So it's a make or break time. So if they like, let them cross this line. If they cross 0.61354, I can tell you it's already a bearish drop already. They have already broken out from an ascending trend line ATL. So the buy you are seeing now is a retest to a broken ascending trend line. So if that happens, they are going to retest it, then continue to sell from there. And for it to become bullish, they need to break out from the descending trend line. And if they have to do so, then we need a strong quarterly change in monetary policy, which will indicate that the Australian economy is strengthening to the point that they need to be above this level to trade will become bullish. They need to break out of the channel. If they break out from the channel, they will retest it. So if they retest the channel, then they go up. So I think AUD have a chance of breaking out from channel. Like you see, why I say they have a chance is that the next upswing after this month candle, if they manage to break out from the structure, then that's going to be a breakout from the descending trend line, which will give them the opportunity to retest and continue to upswing. But what I see is that they will not get to this line again. AUD is not going to touch this roof again. It's not going to touch the descending trend line. They will not touch it because there is a breakout from the 24-year ascending trend line running from 2000. You can see the structure from 2001 to 2024. Price has formed an ascending trend line. So what I think they're going to do in this case is to see them try to retest the broken ascending trend line. The previous demand floor becomes a supply wave. So on that note, I see them sell down. So this is what we see for Australian economy and the US dollar, and I think this will play out. So for now, let's look out for buy opportunity for AED. There will definitely be a buy opportunity for AED. I can tell you based on the 3 months structure, a breakout and the price at 0.6135 for initiate a demand structure. So on that note, I begin to see a significant push and change in monetary policy that will try to close the gap, but I think the gap is still widened. As they move on to retest a broken demand floor, it will ultimately become a supply roof for a bearish continuation, where we look at to fulfill the floor of the bearish descending trend line or a bearish descending channel. So at this stage, you look at this green bar, it's a potential buy zone. If price manage to return to this level, it's an opportunity to go long. So these are economic stuff, and I won't tell you it would be wise to use you know, lines to represent economic flow. Will there be deviations? Yes, there will be deviations. Change in monetary policy always invalidated analysis. So, but I think from the structure, from what the structure has said, EED structure does not look like a structure that will tell a lie. So what we see is there is a potential buy opportunity for EED. The buy opportunity is to buy into retest zone. Is buying to retest a broken ascending trend line. Let's change the color so that it will be more specific as we watch it. Right? It will be more specific because sometimes it can be carried away. So let's change the color to black. So if price now upswinging, it's upswinging to retest the broken, black ascending trend line as a retest, then continue to sell from there. So this is what we see shall be a first one.